The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And we're going to take a look at the S&Ps immediately. Just want to bring up our 240s here. This is kind of where we left off yesterday's show, just to get right into it. Here's the exact time frame we're doing the show, and we talked about trying to leverage off this 2059 even up into that 2063 area, that weekly unfair high that is held. Our Brett situation, again, just getting right into it here. Our Brett situation was kind of flip-flopping around a little bit all over the place. That's the kind of tense market situation. You can really get some leverage off of some of these inflection points. And right now, our weeklies are still trying to hang in there. Dailies have been pretty consistent, even actually day before yesterday that started happening up in here, crossed it back over again. But that's why we took the stance yesterday around this 2059, 2063 DMZ up here. Statistically, it's almost impossible for me not to be right sometimes, but we were looking at all those things lining up, and it's, the good news is you can pick your battles around some of these inflection points, call it quits, just like the day before. I'm just going to kind of review this. Day before, I told you, nerve-wracking experience. I got stopped out. I'm kind of a stingy trader. I don't like to let things go too far against me, unless, the game is a little bit longer term and the position's a little bit lighter. But I was really trying to leverage off of the inflection point here previously, that 68, 69 up into 70, and I got stopped out actually twice. But then the floor caved in, and that's kind of what it takes sometimes is, be prepared to turn the wrench the same way. Getting stopped out is a part of the game. That didn't happen yesterday, happened the day before, and, be prepared to get back in the water. And a lot of people look at that as, well, good God, I sold low and bought high. Well, why would I not sell high and buy low? I mean, sometimes it pays to wait and let things confirm. We talk about this all the time. Breach some of these levels on the upside or downside, and then get back in the water. So this is just a little bit of a primer of how 2 days kind of worked out. All right, got a couple of emails today. One of them was actually talking about the XLE. We're going to go right into crude oil really quick, and that's the situation on the S&Ps. And you know what? I forgot to tell you my opinion of what was going to happen in the future, not in the past. So here we go. Let's go back to the S&Ps really quick. It's getting late here on a Thursday night. All right. Here we go. 2038. Again, I apologize for not going through the dissertation of what might be happening in the future. What do you do now? I can't argue with this too much. I need to see this thing at least get down to the major inflection points again, the 38s of the world. And I actually feel like this time we could head much lower. Here's the June contract. Here's the S&Ps. I don't say this too often, but I feel like we could actually crack. Rates are kind of, market likes the rate situation the way it's going, but they're doing their little thing for a reason. I don't think anything has to do with it. I think Greece is just step back and think about it. Those people have defaulted a couple of times. Does anybody actually think they're going to do anything else except pull away and just let things fall to hell and get it back and clean the slate and start over? I mean, that's just basically what, and then people will lend to them. You know what happens when you get, well, I haven't gone bankrupt before, but I've heard the stories. Put it this way, everybody's sending you your credit card the day you get out of bankruptcy court. So, if I were them, I'd do it. But anyway, how does that factor into the S&Ps? I think, with the Brett situation the way it is, I know this can be looked at as like double bottomish, triple bottomish, whatever. I'm looking at it as this compressing down and kind of making lower highs on the way down. And I think we're going to do a flush. And I'm not just basing that on a hunch. I'm basing it on looking at this stuff every day and looking at some of the leaders and where they're at in the grand scheme of things. Remember, we look at this in a non-weighted fashion. So when we go into, the S&Ps, and I clear the slate here and I pull up the S&P 500, I'm not going to do it right now. We look at this breadth calculation in a non-weighted fashion. When I go in here and look at this, and I go into the daily, and my statistics are as I mouse over. So I'm just going to, look at this, look at this, look at it. I'm looking at the leaders versus the rest of the pack, and there's a serious divergence, if you will. And that means to me that nobody's really got control of this, and some people may be stepping away from the table on the long side. So I don't think 2038 is the bottom. And in classical technical analysis, you may be looking at this as the bottom when it's touched a couple of times, and that means it's a stronger area. I think we're going to flush. So that's my opinion on it. Let's go back to the XLE. And as we look at the XLE, yeah, and Jay's saying nobody expects a big pullback here. That's what you want to hear, actually. You want to hear that the Kramers of the world are yapping it up and saying everything's on sale. I love it. I think Tom's right on this one. Here we go. Let's take a look at crude oil first, then we're going to get to the XLE. We had a little bit of a pop yesterday, coming back into sanity now. 48, that's the big number. You got this 49 general area. Up top, a new profile. I like the way this is kind of a squeezier little profile, inside profile, if you will, in the long term. Again, you're like 48, 49 DMZ. I've kind of been more longish on crude oil than short. We obviously made some new lows a couple of weeks ago, but we bounced back up. We're trying to get back into a profile. I like the situation of putting stops below 48, basically, and just trying to play the game that way. Let's take a look at the XLE. This was something we were using the relative strength trading game against crude oil, the easier possible trade. When we got in, playing it from the long side, we started kind of using that mechanism back here. As we go into the 79 area, though, a couple of weeks ago or a month ago, we started breaking below profiles, and we started retesting on the daily, and then we had to sit tight. I wasn't a big fan of going short the XLE, by the way, but when we started getting this new breakout above 76, we said we had a new profile appear. That's new demand area. That in itself, and that little orange bar that happened there, which was actually painted right on the scanner for you if you're looking at the XLE, that means that it was possibly a new profile going to appear, and that means it might be okay to start looking at this with the new inflection points and orienting stops now around that. So if you were long and you kind of saved some points and called it quits below 79, look where you were able to pick it back up, talking about the process of buying low and selling high. So this particular little action I love. It's actually relative strength trading against crude oil, and it looks very, very cool. And this 76.19, I know one of the folks that, I think his name was Will, that wrote me an email about the XLE specifically, said he had a relatively tight stop in. If that relatively tight stop is based around that 76.19 area, based on your appetite for risk, I'm not going to disagree with that. You can always get back in. I think that's actually a great looking situation. Remember, your targets above are going to be 80, and in my opinion, even higher. All right, so that's the take on the XLE. All right, let's take a look at the XLF really quick. If you guys watch the show, it's the bane of my existence. We had the new profile appear yesterday up top. That's relatively bearish. In my opinion, this thing could come apart at the seams just like the S&Ps. I've never, said that about the S&Ps. I've just got, some things just don't feel right about it, and the breadth is kind of a little bit of a telling story there. Haven't had the weeklies crossover, but I just feel like that's a foregone conclusion. I think we're going to see it, and if that happens below 2038, by the way, we are going to have a flush. So the XLF, what do? I think you still put the stops above, in this case, 24.28. Just try to let this thing fall apart with it. Hopefully, you can get some market help there. But as we look at, the yield curve, banking, financial stocks, they're not all banking stocks in the XLF, but as we look at this yield curve, we've talked about staying away from being short treasuries for God knows how long. And, we had that ADP thing happen yesterday. Didn't even get a retest of it. I mean, I think maybe intraday we did, but, this is the situation where banks don't get to squeeze you and rape you. Can I say rape on this? Al, can I say rape? They don't get to rape you. So anyway, here we go. Let's go into let's go into gold here. I'm sorry, somebody messed my screen up. We're supposed to be looking at the June contract, and here we go. How did that happen? Anyway, 1208, hit that to the tick. We talked about, possibly just putting some stops below here yesterday, 1177, 78, 79, and talked about targets above. I didn't think that was going to happen in one day, but it seemed to happen in one day, and that was let's see where the high print was on this. 1208, and the inflection point's at 1208.30. So I'd call that met. And the good news is on stuff like this, remember we were looking at the Paul Tudor Jones situation, and what I kind of gathered out of a video that he was actually never very proud of. It was a documentary piece. If you can find it, I was supposed to give it to TFNN, and they were going to post it, but I forgot. I'll get back to it. But one of the things he was always concerned, where's the downside risk? And looking at all these trades that we do all the time, we always look at, where do we put the stops? That's the first thing I think about. So where do you put the stops on gold? It was pretty easy. There was a little bit of a DMZ. You could play down there from like 71, 72, 77. An intermediate trade was below 77 stops. So that worked out quite nice. We will be right back, guys.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I am going to pull up really quick November beans. This has been something I've been on. I tell you what, oh my God, here we go. Look at these inflection points here. Okay, so we talked about this thing drifting down into this 942 area, 942.5. That happened a couple of days ago, and then did the, if you didn't take it off there, man, I left some on. That hurt. I was pissed. But was really banking on this thing drifting down to 942.5. That happened. Was it gift horse in the mouth? Had to take off some there, but reverse back. That's not what you want to see. Being short, by the way. And now we've come up and all traveled the entire fair auction in two days. All right, so 973, 942. That's a really big move for a $9 bushel instrument in my book. I mean, trust me, beans can. I mean, John in Philadelphia is probably, hopefully, laughing. I mean, beans can move severe. It's almost the crack of the grain world, I guess, of the commodity world. Yeah, I know. I tell you what, if the way they've got this thing rigged up now with the electronic executions and the floors kind of going away on that thing too now, you can trade soybeans. It's almost like trading. The Russell futures back in the day. I mean, this thing really, really moves. It's amazing. Gets kind of thin sometimes too. That's why I kind of, make an analogy to the Russell. So anyway, what do you do with it now? I think it's a shorting opportunity. I mean, that was great for to drift down to 942.5. I still like trying to find battle points to short this. We were in no man's land on the daily for a while, but now we've gotten back up into that inflection point. It's kind of cool. You saw gold hit that. Now you see beans hit it. I mean, I'm kind of bearish on beans. So I've got stops above 973 on this one. Okie doke. Let's take a look at the December corn really quick. Okay, here we go. Here's the situation on December corn. You know, the price of corn is there's a lot of corn out there. And the weird thing about these farmers is, I mean, I talked to the guys at the elevator down in the eastern part of North Carolina grows a lot of things, and there's fields you can kind of look, and as far as you can see until the earth curves, they're a field. You know, they're huge fields. But it's a pittance relative to what the Midwest grows when it comes to corn and beans and wheat especially. So it's not they've got a relatively big elevator for that, portion of the country. And I was, I call those guys a lot, and I was actually going to have McLean on today again, but I said, can you come on today and let's talk about these things, and let's get some fundamental insight going along with the technicals. And he said, and I hate to tell you this, he said, and Jay might laugh about this, I'm still too depressed because UNC lost. I mean, that's what he said, and I was like, dude, are you crazy? Come on, let's get it together here. Let's figure this out. And he's like, no, man, I really am depressed. They should have won the game. So anyway, we'll move on. 409 a bushel. Here we go. That's the weekly unfair lows. All right, on corn. I'm still bearish on corn too, by the way. And you got this 408 on the daily. So you got that report. You got some movement. You kind of come back and retest it almost. You got back up in the 407 area. So we got 408, 409. We've been to 407. I like this as a short too. I think a lot of these grains are just going to drift lower. And I think beans just squeezed the heck out of some people. That's what that was about. So always next year. Don't say that to a State fan, an NC State fan, Terry. We've heard that before. And we've heard it since Valvano won. NC State has not won a conference championship in basketball, not a national championship, a conference championship in basketball or football since '83. How sad is that? How sad is that? Here we go. So I'm relatively bearish on corn and beans, and you've got the inflection point story and stops around. I was there when Jimmy was there, and it's kind of weird. You go to practices, and we'll cover that after the next break. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We got a real treat. Edmundus Katinas is on with us, and he's going to... Well, Eddie, are you there? Let me check that first.
Hi, John. I'm here.
Hey, man. Hey, man.
Hi, John. Hi, everybody. Good morning, everybody. I'm here.
Great. You're in Spain right now, correct?
Like always, want to be in Spain. Don't want to leave anywhere where I'm staying, guys. I would recommend highly that place to everybody. But yeah, that's crowded in here. Small beach and just kidding. Yeah, I'm here, John.
Well, yeah. Well, the reason I say that is you were in Smolensk and Moscow and a couple of other places recently. I know you've had some visitors lately that came from there, but man, I tell you, traveling is sometimes no fun, and we were kind of commiserating about that. And I know what you're saying. It's nice to be back. I expect for you to be back in Spain, so I feel for you.
I'll pick the line when I'm traveling. Yeah, in Moscow it's kind of expensive city, and I had some business in Smolensk, and that's like 600 kilometers or 500 miles. So night trains were a very good way to commute. So I had a business during the day in Moscow, and another during the night. Another day I had in Smolensk. Though I lived 7 days literally on the train, on the night train in the cabins, the sleeping cabins. I lived. It turned out to be cheaper to sleep on a train in a train cabin than to get a hotel in Moscow. It's an expensive city, but that's economics, guys. If you ever be traveling between Moscow and Smolensk, or you want to live in Moscow but just don't have money enough, sleep on a train, on a night train in a sleeping cabin. It's cheaper.
Well, I actually like sleeping on those sleep cars and going around Europe. I don't know. I haven't trekked across the Smolensk to Moscow run, but I'm sure that was. It's nice.
Well, yeah, John. Yeah, those old cabins. I agree with you. Those old cabins are old style, mahogany stuff like this.
Yeah.
The train actually was not Moscow Smolensk. The train was Moscow Paris night, and it's a very
Okay. Wow.
yeah,
That's a
fancy
trek.
stuff. With all kinds of restaurants and silverware and the china there and for the eating and it's a beauty. It's a piece of history here, traveling history.
Man, last time I was over there, we were trekking it across some of those places. I didn't think we were going to get back with our underwear left. It was kind of scary. Some of the places in Eastern Europe we were messing around with. That was back in the mid '90s. So anyway.
Yeah, John. I guess your listeners, they want to hear how we're making money, man.
Yeah, they don't want to hear those stories. All right. So you are in the middle of some serious positions lately, and what I wanted to do, because these guys, they're interested in trading tactics. I think a lot of times because like what do you do when something's just born a new hole in your what, and how do you possibly mitigate those circumstances? So what I'm actually showing the Shanghai right now. I'm sorry. I was Joey was on the show this past week, Eddie, and we were.
I listen. I enjoyed it, John. I enjoyed it. It was very informative to me, and you and I know he's using our market profiles. Yeah, and I was, but on those instruments, applications on instruments, was very informative to me, man. Very informative.
Great. Yeah. Well, he kind of focused. I asked him because a lot of folks don't get a chance to really know the skinny on the the Asian things that are going on over here, and he was kind of getting a little bit of historic. I mean, just a Reader's Digest condensed version. But he kind of I said, well, what do we do with the Shanghai and the he started focusing on the Shanghai and the Hong Kong. He said we're going to be breaking out again, and if we consolidate on the Shanghai like I'm showing you right now above profiles, he said now you got to chase it. So I'm going to go back into the Hong Kong while we're talking about that, and he actually called this, and we have had some radical action on the north side here now on the Hang Seng since we talked, and we're actually probably going to close definitely above this 25,000 area. That's huge for the Hang Seng. So, but let's kind of talk about some of the positions that you've had on recently, and I know that you've had to wiggle out of a euro trade because we were consulting each other about that. I'm going to pull up the euro. Yes, this is Eddie. He's in Spain right now. Somebody was asking me the DNA. So let's kind of just go through the motions here. I'm going to pull up the euro, and you're on a little bit of delay, but you should see it pop up in a second. So what was the position, and what was the remedy, and what was the P&L? That's kind of what we want to know. So.
Oh, okay. Situation was, leave this daily chart because I was administering my trade based on daily chart. And as you can see, this yellow bar, see that yellow bar, not last one, but previous bar, like 2 weeks ago?
Right here.
That yellow long energy bar after the announcement of the our last Wednesday. And I was technically short on this thing, right? And I was waiting for the chance to go exactly same this yellow bar. And I already know from the top of my head it's 107.34 was the top of the profile, and the price on this it closed inside of this yellow bar. It closed inside of that profile, right? It was on what date it is, Johnny?
That was the 19th. Yeah.
Okay, on 19th. So I'm loading up myself short based on the two reasons. On fundamental long place.
Are you shorting against the top of the box as it rallied back up? Is that the 107 and a half?
Yeah.
Okay.
Let me tell you how I administered. I loaded up the shorts on this yellow bar when price closed inside of the balance, and I was comfortably technically long term, of course, and short term going short this instrument, and when next day price closed above the box, I kind of say, start looking for I should be going long, or at least should be covering my short positions, again, all of us, we're human. I am not a machine. I hate to be long on this instrument, but I had an idea. I cannot be short anymore. So what I'm doing, I'm loading up, holding my long position, short position, I'm loading up on short puts. Short puts means that for those who doesn't know about it, I administer that trade. That's a long position. If the price underlying goes higher, put premiums will reduce their value. Therefore, I shorted them. I want the market go higher. That the puts would be lower, smaller in value, and therefore I could buy them less, or they would expire worthless. So what I've done it. I do neutralize delta. There is a way of administering your portfolio by delta neutral for your listeners who doesn't know about it. So technically, I did not touch my shorts. I just loaded up on short puts, neutralizing the delta. And the premium I received for the puts, the same week of expiration, I managed actually to make money, John, holding up my shorts, initial shorts, but making much more money on short puts. But in general, if after all settles down, so I reduced my short position right after the price closed above the box, and that was the key information that I made the decision.
Right on the 20th. Yeah, I remember we were talking about that, and you asked me, like, I mean, objectively, almost, anybody, that includes me and you, could see that we are outside the balanced area, and this thing could keep running, and there's no reason to sit there and hope or try to, turn a simple situation into a very complicated situation. And a lot of times, I want to ask you this. A lot of people, you threw out the term delta neutral, and a lot of guys listening to the show, I would assume, know what that means. But a lot of times, you can kind of hedge and delta neutral yourself to no man's land where you actually can't make money. What was kind of I know you're trying to get into a little bit more balanced state, but why did you start looking at what you were doing specifically instead of doing something else to hedge?
Hedge was defined, as you just put it right way, John, and your listeners probably would, or viewers would know that hedging 100% is not like hedging at all. So it has to be timing for hedging. Key information that I had is that the price closed above the balance. If I would not have such information that we do have right now, those market profiles with the supply-demand areas, that the price closed above demand area, which is change and piece of information, I probably got hurt a lot. But in that case, the reason you ask me why, because the price closed above the balance and condition changed a lot. I am not the machine. I had to actually close that trade with the minor losses, but I believe in my heart that euro and dollar pair is a piece of crap, and it's not deserve even to think about going long. So just intentionally, mentally, I was actually not perfect, but I executed this right way because what was information correct. I had to go long or close the short position, and I was forced to go long. And going long, to me, by my knowledge, my experience, I'm in options like an efficient aware, so I picked up the right to. I even made money out of it.
That's amazing. And I got to throw this other piece in, which almost puts it exponentially more difficult. You had a guy from BlackRock looking over your shoulder the whole time. That's what killed me. I was like, oh my God, that's difficult in itself. Even if you have your mother looking over your shoulder, I mean, but
he's still looking over my shoulder, sitting right next to me and listening, hearing me this thing, John. So you're on a speaker, man. This is there's secrets here. He's still here.
Well, that's hello, Vlad, if you're still there. But it's not easy to trade with somebody sitting there. That's what I was trying to say.
Hi, John.
Hey, Vlad, how are you?
Good.
It's good. I'm glad you're still there. Eddie said you guys are getting a lot of work done there, but maybe it may have been a good thing to have him looking over your shoulder. Who knows? Eddie, I got to show you something.
Wrapping up to your listeners, so there's this situation of the euro. Do you see, everybody see the new balance that showed up a week ago? And actually, I want to be short this guy again, but I can't, John. At the green line of the area of demand, it's a little bit 106.80, 107.0 on euro dollar. There. I just had to leave any wills or wishes to go short on this guy. So we again delta neutral, and we are actually administering the trades in the short term, weekly, daily. Hourly and 240 balances there, because our market is entirely balanced on the long term. As you can see, price is inside of the balance.
Right, we'd have to wait for something. I mean, just in essence of what you're trying to say for our listeners, we just have to kind of sit here and wait at this stage, or play some kind of little premium capture little game on a very short-term basis.
Premium captures, again, selling premium, it's options.
I mean, the euro's volatile right now. There's no question about it. There's opportunities selling premium. You have to do it right, but we really are kind of getting into like a little bit of a balanced state here, and we just got to wait and see. And Eddie will say the same thing. Hey man, when you come over, I got to show this website. We're not going to go to bars. We're not going to do anything else.
That I'm coming over to see you in I'll probably be in Hong Kong in the weekend. That'll be good to run a show with you together.
You and I, Joe, will meet in Hong Kong, but I'm showing a site. We're going to go up there to the mountains above, and this is a really, really cool place I found last weekend. It's you're looking at a volcano. It's got the places hanging off the side. Killer food they grow on site there. It's just everything's self-sufficient. They even grow the meat there. It's really cool.
John, I will be going. Yeah. You have to promise one thing. We should be going to waterfalls, natural waterfalls, with like we've been last time.
They're all volcano. They're all there. Yeah, they're all there. It's
That's like the awesomest place I've ever been.
A buffet of cool stuff.
Yeah, we mixed our drinks. We got our water to mix our drinks with our own from the same pool that we've been swimming into. Water is so clear, and those.
I know.
Unbelievable.
Yeah, Al was saying Nico would love that. This is not an extension of the Nico and Paige Living a Primal Lifestyle show. We're going to get back into trading in just a second. Here we go. All right, so let's take a look at the S&Ps. Now, I've actually we got about a minute left until the next break. I've been kind of looking at our breadth, and I normally just have kind of eliminated, in my trading, any hunches, and I've kind of used some guidance tools, obviously, just like you do on the technical side, and maybe listening to the banter out there on the verbal side. But these S&Ps, I just there's not a lot of scary talk out there, and these things are looking heavy, and the breadth is kind of mixed up, and I think we could have a flush on these things. What are your thoughts? Because we haven't really discussed the S&Ps together lately.
Yeah, I love it. S&Ps on the short side from John, you know this profile. You see the profile? Your profile does not have a fairly exposed or exposed at all the point of control. That means the place where the most trades takes the place. That profile, asymmetric profile, which has no inside or highest trading interest area, that tells us one and only one thing: market is actually has no direction. It's undirectional, choppy, and nervous. That's what the actual information is.
We're going to go to a break real quick. Can you hang around, and then we'll just finish the show together?
Yeah, I'll be happy.
Very good. Very good. All right, guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. I've asked Eddie to hang around. Eddie, you still there?
Yes, John, and my pleasure to be in your show and to give any sense, into this maze of the market activity to your listeners.
Awesome. Well, we kind of finished talking about the euro a little bit, the S&Ps. I've got the Aussie dollar up, and when I was, you and I have been bearish on this thing since we started breaking down the weeklies, and the breakdown of the weeklies. Let's just go back in history here just to give people a little bit of a lesson. We really started seeing the breakdown, the closing below the 93 area. Now we're trading 75. I mean, that's, and this, this thing was well over par. I mean, way up there. So that's the recent pullback. But we started the major breakdown around 102, 103. But let's go into the current. And what happened recently? We got some iron ore prices just going through the floor. The Australians are good for digging a hole, building a mine in the middle of nowhere, building a town of almost 10,000 people to support the mine, and then when the well dries up, they just close the town. This is catastrophic, like iron ore prices doing this, and we've got the technicals on our side. Where do you think this is headed, Eddie?
But tell you the truth, this is not preset, a conversation between you and I. You just throw at me some cold stuff. But yeah, this is no brainer. on a weekly, we just got a new fresh signal that it bounced into the weekly performer support area. That is a trade to get in. As far as daily, you had this information 4 days, 4 sessions earlier, after the first initial break below the balance. And of course, that may be a little bit too expensive to get involved right now, chasing to get shorts, but any bounce into the top side. Good that you opened my eyes, Johnny. I'm going to include that into my portfolio, and I look up to enjoy this thing right now, not getting into the delta 100%. That means getting into the underlying itself, shorting it, but I will short calls. I would short calls that reduce my delta. I will see if the any good entries are there. Yeah, shorting calls, selecting the price of the breakdown from the weekly and daily. That would be answer for today, for the as we speak.
Got it. So any kind of retracements, especially back up into the 77 area, excuse me, on the Aussie dollar, are going to more than likely have to be sold stops above. It's that same old game, close below, go back and retest. We kind of played that before a couple of weeks ago. Didn't exactly work on the first breakdown, but you've got some pretty serious news on this one, and that's the situation on the Australian dollar. Got about a minute left, Eddie. What I want to do is go into the I'm sorry. Let me go into the U.S. dollar. Where is it? I'm trying to find it. This is, kind of in the middle of a fair auction on the weekly. I'm just flashing these things. I know we got about 40 seconds left, and you're not seeing it real time. As we go into the daily, we talked about, this launching pad, the next launching pad around 98.06. Looking a little heavy right now, but just kind of in a noisy kind of consolidation manner. May lurch forward. Got about 30 seconds left. What's your take on this one?
I can see on daily, I loved it, this bounce to play into the balanced weekly market. Weekly is balanced because of this insider profile, new profile, but daily, I love it on the to buy bounces into the from the top into the former balance highs. That means the former supply, current demand. I love it. Long play on a short term.
Same page. And we caught a really good bounce off the dollar around that 96.45 area. And now we kind of are consolidating again above daily profiles. We cleared the hurdles. Eddie, thank you very much for coming on. Vlad, hello. I'll talk to you guys later. And
I am really enjoying your show. Getting a new believer.
Hi and bye.
Great.
Take care, guys.
We'll pick it back up
nice
again
being
tomorrow.
on your show, John. Bye-bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.